All in all, look, the macro data on the surface, at least, still looks pretty good for the consumer's ability to buy. The problem is the sentiment. The sentiment looks horrendous. We projected sentiment for 2025 would start to bounce back to the 60s. Now, keep in mind, for those that don't remember consumer sentiment, this is on a scale of 100. And we were in the 90s pre-COVID. So after COVID, obviously fell off a cliff. We got down into the 50s or 60s, kind of bottomed out in January of 2022. We got a little bit of a bounce, and then we expected a slow recovery. Well, that hasn't really happened yet. And in fact, it's gotten worse. So January 2025, our projection was 66, actual 65. I mean, pretty flat, but definitely missed our expectation. Q2 2025, our projection 65.9, actual 56.9, or that's a 15% variance. We're calling that a significant miss. Q3 2025, our projection was 68, actual is 58, again, significant miss. Q4 2025, projected 68, actual 51, which is by all accounts a historic low for this metric. And then we bounced back Q1 2026 a little bit. Our projection was still 68, actual is 56. So the consumer sentiment, regardless of people's ability to pay overall, is still in the dumpster. And so what does that mean? Effectively, I think that our overall recommendation about forecasting greater than 10% of revenue without a step change lever is appearing to be correct. And if anything, I would be probably cutting that forecast even lower, maybe whatever your forecast was, another maybe 2.5 to even 5%. Because even if people's ability to pay is high, if they believe that the market sucks, then chances are they're not going to buy your products.